Hi guys, welcome back to my channel, Kelvin here. So recently, after Facebook released their results, the stock dropped by almost 26%, setting the record for the biggest one-day drop in market history. Now, pessimists be like, oh no, it's the worst crash of my life. But optimists be like, come on, it's not that bad. It's the worst crash of your life so far. All jokes aside, in this video, I will explain why Facebook dropped so much. Then, I will also share my thoughts on whether the stock is now a buy or should you stay far away. But before I start, I would greatly appreciate it if you can help to tap the like button because it will help out with the channel. In return, I will show you Mark Zuckerberg smiling. Alright, let's start right now. Okay, first up, let's take a quick look at Facebook earnings to see why Facebook dropped so hard, acting as though it was trying to compete with crypto to see who can drop the most. First, their revenue increased to $33.67 billion, which actually met expectations, which is great, right? Well, yes, but no, because while the earnings increased, the earnings per share missed expectations. However, this is just a small issue. The bigger issue is that while everyone was expecting Facebook daily active users to increase to 1.95 billion, not only did Facebook miss expectations, for the first time ever, Facebook daily active users has dropped. Previously, it was 1.93 billion daily active users, but now it has dropped a bit to 1.929 billion. If you look at the long-term chart, it seems like the growth is starting to slow down since 2021, causing investors to be worried and become paper handlers. Besides this, for Q1 2022, while analysts are expecting sales to reach $30.15 billion, Facebook be like, nah man, we can only reach $27 to $29 billion, which is the other reason why Facebook got sold down. So what's causing Facebook to do badly recently? First, privacy setting changes. So last year, Tim Cook be like ara, then released iOS 14.5. In this update, apps now require permissions before they can track user data. It's kind of the same thing when you visit certain websites and they ask you to accept their cookies. That's because when you accept, the app can collect your information and use it to show advertisements that are relevant to you. Like just now, I was thinking about Jia Jia and Kai Kai while eating lunch, and all of a sudden, Foodpanda ads were appearing everywhere. With just this small iOS privacy change, Apple is causing a lot of damage to Facebook. According to reports, over 95% of iPhone users were opting out of ad tracking. As a result, Facebook stands to lose $10 billion. Check this out, in 2020, Google has the biggest ad revenue share, while Facebook is second in place. But the thing is, Apple's new update doesn't affect Google that much because Google is using a totally different way to track user data like search, YouTube, Gmail, and Chrome. On the other hand, Facebook relies heavily on its apps to track user data, so it's totally at the mercy of Apple and Android OS. And by the way, this is just privacy changes on the iOS. What if Android suddenly decide to do the same thing too? Or Facebook will lose a lot more money. So that was the first reason as to why Facebook started doing badly. But the bigger reason is that Facebook is losing its market share. The social media industry moves super duper fast. If you look at this chart, around 2005, MySpace used to have the most users. Then it was YouTube. Around 2010, Facebook had the largest platform all the way until recently. Now, there's a lot more competitors like TikTok, Snapchat, and Facebook knows this too. In 2012, Facebook sees Instagram as a threat, so it bought up Instagram for $1 billion, and the 13 employees all fought big. Then, 1 year later, they tried to buy Snapchat in 2013 for $3 billion, but it failed. However, even though they failed to acquire Snapchat, Mark Zuckerberg be like, never mind, don't want to let us buy? Okay lor, we copy you lor. And that's what they did. Snapchat has that face swap feature, so Facebook acquired Masquerade, an app that lets you swap your face. Snapchat lets you scan QR codes for profiles, then Facebook added that. Snapchat has the story feature, so Instagram copied that. And the stuff they copied just goes on and on. Then all of a sudden, TikTok appeared out of nowhere and be like, 你好. Facebook and Snapchat started losing market shares to TikTok. Of course, if Facebook could acquire TikTok, it would have done so already. But TikTok is from China, so Facebook can't just buy TikTok like that. And guess what Facebook did? Yep, they copied TikTok by making Reels. However, it doesn't help much because Reels earn lesser compared to feed and stories. But the bigger issue is lesser and lesser younger generation is using Facebook nowadays. Check this out. This is a chart of US teens using social media. Snapchat, TikTok, and Instagram are very popular among teenagers, but Twitter and Facebook are on the decline. Not only that, teenage users are projected to drop 45% over the next 2 years. And true enough, nowadays, if I open up Facebook, I will usually see boomers sharing boomers stuff, like Happy Chinese New Year greetings, blessings for 2022, food recipes, how to massage your boomer hands and stuff. Meanwhile, if I open up TikTok, I will see teenagers doing weird stuff, like this Xiaomei dancing, that Xiaomei dancing. And that's when I know I'm getting old. So that was the second reason why Facebook is doing badly. It is losing market shares among teenagers. Facebook needs to reinvent itself in order to stay relevant, and they plan to achieve it by creating their metaverse. Okay, just in case you don't know what's metaverse, just think of it like an online 3D world where you can do stuff together. In Facebook metaverse, you can work from home, see doctors, play games, go to concerts, do virtual tours, and so many more. Facebook is spending a lot of money on metaverse. If you look at their earnings, they have Reality Labs, which is their metaverse division. Reality Labs is losing more and more money, which isn't surprising because Facebook has already told us they plan to spend at least $10 billion on metaverse in this year alone, and expect to spend more in the next few years. That $10 billion could have come from Apple, but Tim Cook sort of denied Facebook that money. Too bad. So now, with Facebook slowly losing its market share, it needs its metaverse to succeed. Otherwise, Facebook will slowly go down, or even worse, say bye-bye and go join MySpace or Friendster one day. But the question is, will Facebook's metaverse work out? It's hard to tell right now. I will share a few reasons why metaverse won't succeed and why it can succeed, starting with why it won't succeed. First, Facebook is late to the metaverse world. Fortnite, which runs virtual concerts, has 350 million users. Minecraft has 638 million players. Roblox has 202 million players. On top of that, 50% of all children aged 9 to 12 in USA play Roblox every week. And what about Facebook? If you count the number of Oculus headsets sold, Facebook only has 5 million users. So Facebook has a lot of catching up to do. Second, hardware. If you look at VR headsets, Oculus has the biggest market share. But the problem with VR headsets is that the technology is not there yet. It can make players feel nausea, eye strain, and other side effects. Or even worse, you can accidentally hit your uncle while playing. That's why Google stopped their Google Cardboard a while ago, because it didn't work out. If you look at this chart, you'll see that the most popular devices to play games are still mobile devices, consoles, and PC, which are all flat screens. So in terms of hardware, Facebook is also very behind. Third, disruption to Facebook. With Web 3.0, online services will become more decentralized and, more importantly, anonymous. This means Web 3.0 can easily disrupt companies like Facebook, Google, Twitter, where they are giving us free service, but in return, they are earning from advertising with our data. Everyone wants to have control of their own data. Like, if you want to remain anonymous, can, no problem. But if you want to sell your data and earn money yourself, can also. Currently, there are already a few companies that lets you monetize your own data if you want to, like Invisibly and DataC. It's definitely not hard to imagine in Web 3.0, Facebook business will be disrupted very badly, and they will eventually lose a lot of market share. But of course, this doesn't mean that Facebook will definitely fail. First of all, Facebook finances is still very healthy. If you look at the balance sheet, it has $67 billion worth of current assets and only $14 billion total debt. While expenses are going up, Facebook's free cash flow is still increasing. Overall, Facebook is still a very profitable company. Second, metaverse investment. Now, even though Facebook is behind in terms of metaverse software and hardware, it's still too early to tell. The reason Facebook's losses are increasing is because Facebook is investing billions of dollars into metaverse, and they're hiring a lot of top talents to build their metaverse. My boss once said, any problem that can be solved with money is not a problem. Amazon was consistently losing money for more than 14 years before it finally turned profitable. That was because it was reinvesting in future growth, and eventually it paid off. I expect this to be the same for Facebook. With a few $1 billion and 10,000 talents joining them, Facebook will eventually come out with something good for metaverse. So is Facebook a buy? It's definitely super cheap right now. If you look at other stocks, Google has 25 PE ratio, Microsoft 32 PE ratio, Apple 28 PE ratio, Tesla a godlike 189 PE ratio. Facebook is only trading at 16 PE ratio, which makes it super duper cheap. So whether you would invest in Facebook or not, depends on whether you think Facebook metaverse would succeed or not. Because if it succeeds, Facebook will easily go back up to the moon. Because stonks. Personally, I'm still uncertain and I don't like to invest in uncertainties. Trying to predict whether Facebook's metaverse would succeed or not is like trying to predict which character will survive Game of Thrones. If I want to invest in the metaverse, I will invest in the underlying technology like Unity, Autodesk, Nvidia because these companies are less easy to be disrupted. As I'm still not 100% sure if Facebook's metaverse will succeed or not, I will not invest in Facebook yet. But let me know, what do you think? Are you investing in Facebook or will you stay far away? Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.